All right, guys, so today's video, I'm going to answer for you how Donald Trump doesn't pay any taxes. All right, so let's dive on in. So guys, here's how Donald Trump doesn't pay taxes. Let me go into this with you. He's using real estate and he's using all these legal tax write-offs / loopholes, things that are in the tax code that you can do and that I am doing myself as well, that any real estate investor can do to really avoid those taxes. So first off, this is really beneficial when you're buying multifamily properties, okay? Multifamily real estate, there's lots of tax write-offs that you can have. So let's say you buy a big value add apartment, okay? So that's what we've done here. We syndicated this with other investors and we raised some money and we bought this big apartment, okay? And we actually put in a we're going to put in a $2 million renovation on this property. I already done $1 million of it. Getting with my CPA and accountant and looking at our reno budget and everything, they're gonna line item it all out. And what we've done on our previous deals is we can actually use bonus depreciation. Okay, so go look that up. It's a new thing passed through that 2018 tax law. And of that, it just basically means anything that you're renovating on the house that has a lifespan, there's all these lists of what has a lifespan under 15 years, you can immediately write those things off. Okay, so our account estimates that 60% of this $2 million reno budget is going to be able to be written off, okay? And that can be written off, and especially since I am a full-time real estate investor, so that's another thing. You need to be a full-time real estate investor. You need to talk to your accountant how you can qualify for that. Just some certain things you can do, and you have to spend a lot of your time on it, at least 700 hours a year. So 2 million times 60% of just the reno on the property, 1.2 million we can write off on our taxes, okay? Right? Now, obviously it takes some money to buy this property, but what's awesome is that most of this reno loan, yeah, we have to pay this money, but most of the reno is on a loan. So we're getting a loan really to subsidize this $1 million reno. It's not my personal money. So I'm spending very little of this 2 million as my own personal money, me and our partners and the people on the syndication, and then this 1.2 million can be written down. So if you own that all yourself, as long as you don't make over $1.2 million, just buy one big apartment a year. The loan, I think we have a 75% loan on this, that construction loan. So as we pay the bills, the loan takes it. And there you go. You as long as you don't make over 1.2 million and buying this was a 124 unit apartment. We bought it for 2.6 million. So I haven't even gone into this. We can write off a lot of things on here as well and depreciate this over time. Just on this reno alone, we're able to write off a lot. Okay, on your taxes and all of that. So basically you can just show a loss all there. So that's what Trump is doing. Now Trump's making a lot of money, tens of millions. I know he's making a lot of money, but what he's doing is he's just adding some zeros onto this, adding some zeros onto the purchase prices, and can go ahead and start writing that all off. Now maybe he's not doing quite a big of a ratio of the reno. He might be buying assets that are already stabilized, okay, but he's buying stinking skyscrapers, right? And let's just say, he buys it for 100 million, okay? What you can do is something called a cost segregation study, cost seg study. What happens is that an engineer goes to this building and he breaks it into pieces of what everything's worth, like the cabinets, the furnaces, the ACs, the wiring, the doors, just all these things, and categorize them, gives them a lifespan. Some have a longer lifespan, others don't. But then using the bonus depreciation, the ones that have a lower lifespan, you can actually write off the first year. Where previously you wouldn't be able to write those off that first year. You'd have to depreciate them over 5 years or 7 or 15 or 20 or 30, whatever it is. But now most of them under this certain threshold of time that they depreciate, you can write it off in the first year. Okay, so now I've just seen theoretical studies from cost segs. Let's say the land was worth 40 million on this, okay? So let's say now the building value, this is how they do it. The building value is 60 million. according to his cost seg, they might tack off 20 to 50% depending on what the lifespan of a lot of things in this building are. Let's just say it's really low, and let's just call it like 20 million of this, 20 million of that purchase. So you can go off and write $20 million year one, boom. So as long as you don't make $1 million, you can carry that over in the next years as long as you're a full-time real estate investor. A lot of tax things, consult with your tax accountant. Anyways, that's what we're doing here. We're taking advantage of all these ways to avoid taxes, legally, morally, and ethically, that you can do right now today. And basically using these renos and writing off a lot of it according to the bonus depreciation, doing cost segregation studies, and saving a lot just alone on the taxes. Now, this apartment we're gonna increase the value. This property we bought for 2.6, we're all in, let's just call it 5 million. This property is gonna be worth 7-8 million when we have it all fixed up and restabilize it and have it more occupied. Everything like that. Then we're gonna refinance, pull all of our money out, have no money left into it that we put down, and just keep owning it. So there's lots of great advantages and theoretical things you can do in real estate to get rolling. But I just think it's really awesome with these cost segregation studies and the bonus depreciation. That is how Trump doesn't pay any taxes. And that's how a lot of real estate investors do it. Thank you so much, guys. Like and subscribe to this YouTube channel. Be happy to teach you some more things.